I'm Nicole Petalides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network. Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Thanks for being with us on this Thursday. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Methman, Chief Market Strategist, bullseyeoption.com. Good to see you both. So you're talking about the meme stock, GameStop. Alan.
Yeah, I don't even care what the name of the stock is. I'm trading the chart, and I'm looking at risk reward, I'm looking at probability, and I'm looking at this opportunity. So it's the chart, not the stock, and this stock has been between 15 and 30 now for 5 months, 22.5 where we stand right now. It's kind of the midpoint. So what I'm looking at is to position, because I see a bullish divergence bottom. It made new lows, but not new highs in implied volatility. That's a sign that there's going to be a short squeeze and you're going to get some profit taking for those shorts. And also I'm seeing some leverage buying here. Now, the low is 15.41. I'm looking at buying the June 15 call for about $7.50. And so it's $6 in the money. And look to see if it can make another push to the upside, because I see a lot of bullishness in this price action.
Wow, so the low was $15 and change. Your thoughts here? What are you thinking, Ben?
Nicole, Alan, this is a stock that's rallied from 15 to 25, but as we look at the bigger picture, you're going to see that on the longer term, we're trending lower. Here you can see intermediate bid activity. So this is somewhat counter trend to what we've seen long term. Taking a look at, well, there you can see bottom left corner to top right, and we are seeing some strength here. We're seeing some momentum to the upside, and you can see that through these areas of value that formed at higher and higher levels, but we've kind of lost some of the momentum right here, more so sideways than not as of recent. We're talking last couple weeks around the $21 level. Let's move away from this hourly time frame because it only shows us so much. I wanted to point out on the daily, as I mentioned, this move we just looked at, 15 up to the 25 level, we'll call it, very much counter trend to what we've been seeing on the bigger pictures. You zoom out and really just a blip on the radar, right, from near 48 back in August of last year down to that low we just mentioned to begin this year. And as I look at this, I see areas of value that formed at lower and lower levels. You can see I've identified them, 42, 35, 26, and again, we're currently balancing around this 21 level. So tough to get excited about a stock that's been trending higher on the more intraday, but on the longer term, trending lower after kind of failing at a key area, right, that 26 area, because as we're forming these areas of balance on the way down, we're constantly referencing the middle of the prior area of balance to form relative to the one, again, currently around 21. So as long as we're below 26, the bears are still in charge here, in my opinion. Taking a step back as we look at where things stand in terms of the 50, the 200, we're below the longer date of that yellow line. We're teetering around the 50. I'm noticing here that this is a stock that's come off lows, but even RSI started to roll over here right now. Just kind of limited in terms of real enthusiasm to the upside. This looks like this could possibly be another sell opportunity along this longer-term trend to the downside that we've been seeing.
Have you ever been, and thank you for that, Ben. Alan, have you ever been in this name before? What did you experience?
I have traded. Yes. I'll trade anything, anytime, any direction, as long as it's a liquid market. There's a lot of buyers and a lot of sellers. I use limited risk options. So yes, I've done very well in this, and I am certainly not a trading bro. I use in-the-money options that have a high delta, whereas the bros use out-of-the-money options that have very little time. So I'm putting probability on my side, but I'm still going to trade something that I see as an opportunity. And if we just get back to the top end of this range, this option, this limited risk option that gives me the right to be long from 15, which is a low, gives me, that would produce a 100% gain in the option, and it's June, so it's got plenty of time for some bullish development.
Interesting. Any quick thought on that, Ben?
we're still in the middle of that range for the most part on the daily time frame, and still have yet to start to turn on the hourly, right? We still have yet to invalidate the hourly or the value moving to a higher level. Once that stock starts to roll over, that's when I guess the bulls should get a little bit more concerned. My point was just on the longer term, the bears still seem to be in charge.
Okay. All right, let's move on. And let's get to Alphabet. You're looking at this one, it's at 94.80, and you say you have $85 calls. Tell me a little bit about this.
All right, well, we've seen a nice comeback in the NASDAQ, obviously, in 2023. Now, there are a couple of stocks that really haven't rallied as much as some of the leaders, so this is a good example of that. GOOGL is the one I'm using. There are two. Now, this is 35% off its 2022 top, whereas the NASDAQ is 25%, so it's got some catching up to do. Now, in the big picture, this had been a high flyer, and as the next stock we're going to get to as well. So compared to what happened in Tesla and what's happened in Meta, which were two stocks that were down and on the mat and almost out, those have had 100% bounces off their lows. So I like this in the big picture. I'm looking at Google here. It's been between 85 and 105 for 5 months. Breakout of that range targets 125. The midpoint is where we stand right now at 95. So I'm looking at that as a weekly solid support level to lean on. I'm going with the April 85 call. Again, 83 is the low. Google makes money. They are solid, and if we get a macro comeback, as I'm looking for, this is going to perform very well. So if we just get to the 115 level, this option again doubles in value. That's what I'm looking for.
Right, and even with this recent dip, Ben, what are you thinking?
This year, if you remember, we rallied up and have lost momentum to the upside since. Not only lost momentum, but giving back some of the ground that we established on the way up. So you can see in this instance, again, a pretty well-defined bottom left corner to top right corner spike up to 112. But once you start to draw those areas of value, and again, this is where Google's a little different than what we just looked at in terms of GME. GME had yet to invalidate on the hourly time frame, but look, Google taking out the middle of the balance area 96, the balance that formed prior to the one that was established as we were kind of teetering and just kind of horizontal form pattern around that 105 level. So this invalidates the working assumption that we're trending higher on the hourly time frame, which feeds into that bigger picture chart is taking a look. Again, a similar situation where we were rallying a more intermediate counter trend move relative to what we're seeing on the bigger picture. So that move we just looked at a small piece of the bigger picture story that's been playing out here. You can see shares of Google topping out around 155 at the end of 2021, beginning of 2022. Look at how they've been coming off, and look at where we just failed. It's interesting because, again, right at a key level, an upper extreme of the range that we've been in since September, October of last year. Right now, working our way through the middle of this range here. So further weakness opens up a door for a retest, which again is just in line with the trend that we've been seeing to the downside. Google potentially a little bit of a leader in terms of some of the momentum to the downside. It'll be interesting to see if the broader market kind of falls in line with this. Taking a step back just to show you where we are. Google, look at this. A brief test above the 200-day moving average. Breaking now below the 50-day moving average. Look at RSI, supportive of the move lower here to the downside. Google coming under pressure. Again, short-term move up, starting to get invalidated. Longer-term trend to the downside. This is exactly what the bears are looking for here.
Yeah, after all those steps down and then trying for that 200-day moving average, sort of, flirting around with it and coming back down. I mean, giving the shareholders, obviously, a little nervousness. Alan, final thoughts there?
Well, again, I see the same thing that I saw in Meta and the same thing I saw in Tesla, or I saw a bullish divergence bottom. When it made new lows, it did not make new highs, implied volatility. So that meant the short sellers were running out of strength. We've had a bounce off the bottom, nowhere near the extent of the others. But if you look at the risk reward, I like the upside on this stock. And this 95 level is a midpoint of this range right now. So I'm looking at this as a level to hold on a weekly basis. So let's see where we can go go from here. A limited risk play, a deep in the money option, plenty, you got some time for some development here, and I would look to see if there's going to be some rotation back into this high-flying stock if the market gets a little bit more stable.
All right, and let's get to gold. I love talking about gold. We watch it. We got so close to 2,000. You're watching Barrick Gold in particular, which today is trading around $18, just over $18. Alan, your thoughts here?
Well, I think gold is something that we've talked about in the past. We've had many plays in gold. I think we had Barrick Gold about 4 or 5 months ago. Gold has stalled and pulled back. So it's not a strength chart, it's a second chance chart is what I'm looking at here. So I'm looking at the same thing. We had a bullish divergence bottom, and I'm looking at buying some time. The call here is the June 15 call. It's trading for about 4. So the expiration break even is not far away. And I'm still confident that the trend is down in the dollar, and that would be up for gold. And this pullback below 1900 that we saw in the gold itself is a good second chance swing.
Right, okay. What do you think here? I mean, Ben, you follow gold so closely. You're watching Barrick Gold as well. What's the chart telling us?
Well, I think it's important when you're talking about Barrick Gold and some of these other names that Alan just mentioned, just to remind the viewers they're not a proxy to gold futures, right? These names could move tick for tick and then oftentimes completely diverge. But in terms of what we've been seeing, a nice rally up, right? This is kind of a mix of the two names that we've already talked about, GME and Google, because intermediate trend to the upside here that, well, much like GME, still is yet to invalidate. Let me show you. We've got the areas of value that have formed on the way up, and you can see that we're still holding above 17, right? So again, this is, although on the more intermediate time frame, similar to the other two names we looked at, you're going to see here longer term trending lower. Now, not necessarily as well defined on the daily time frame. Let's move away from the hourly candles. Here you can see the daily, and right, we're kind of just in the middle of the range that we established last year. We traded up to 26, down to 13 in the fall of last year, and look, as you can see, here we are, right in the middle of the range that was established. So kind of a pivotal area. No real lean here. I would say when in doubt, zoom out. Let's do just that. And here's where you can see some of the conviction, the trend environment, which has been to the downside from 56 back in 2011 all the way down to the lows we saw around $5, $6, $7 back in 2016. And you can see how we've been forming a bit of a range since. So let me just kind of sum it up here, because I think this is important. You've got a trend to the downside on the longer term, just like the other three names we looked at, or other two, more short-term trend environment to the upside. But again, like GME, gold has yet to invalidate that trend to the upside on the hourly relative to Google. Google, high conviction to the downside, took out that area of balance that the bulls in these two names, again, GME and GLD, or I'm sorry, GOLD in this instance, are holding on to at this point. So again, you've got trend environment on the more intermediate to the upside, but longer term trend to the downside. But this again, like GME, is a stock that could have a little bit of room to run to the upside here before it kind of runs into the upper extreme of that longer term trend to the downside playing out. So keeping an eye on this one, kind of a pivotal area here on the longer term weekly time frame. This should be one to watch in the coming weeks and months for sure.
All right, excellent explanation there, Ben Lichtenstein. Okay, Alan Nuckman, final thoughts here. You know, we've made it through so much of earnings and Fed, and we just had a guest on who does a lot of statistics and uses computers, and he said basically that the macro environment seems more constructive. What do you see for 2023?
I've been saying the same thing, and this is the first guest that's been on before me that had a somewhat positive outlook. So I'm glad to see that. And we've talked about the futures markets have been telling us for a long time that rates top out now and they decline in the future. So, you know, I think that's very constructive that we've gotten to this point and we're at the end of our journey. We're almost reached our destination, so the markets can look forward. And the price action has been positive, obviously, in 2023. Let's see if we can get above 4,200 in the S&P. If we can do that, then this won't be a fake out breakout. This will be for real. So I did get two coulds from Ben today. I got 2 out of my 3 stocks he said could move higher. So That's a good start. Good.
That is a good start. Good. That's actually key. This is like Fed speak. We got to watch the language. And I will watch for 4,200, right? I'll see it when I believe it. Alan, if I see it, I'll believe it. Alan Nuckman, bullseyeoption.com. Great to see you. Ben Lichtenstein, great to see you as well. Thank you both very much. Next up, we're going to spotlight big box retail. We'll talk about Costco, Walmart, Target, some of the trends that we've been seeing in the retail space. Trading 360. We'll be right back.